should be guided by your due diligence checklist printout that we've given every one of you. So the due diligence checklist and everything in it is pretty much what we have, our experience indicates is what investors want to see from you. It's something that we've evolved over the last, 4 years. A lot of experience with teams and investors, different types of investors. And the idea with this is, how do you blow them away? How do you really impress them with what you've prepared? Because as you move through conversations with investors, what you constantly want to achieve is, yes, nodding. Let's move to the next step. Let's get you talking to this person. Let me ask you more about your financial model, your pro forma. Talk to me about your org chart or your hiring plan, right? Your traction report. These are ways, all of these documents are ways for investors to dive into your business more deeply, okay? And before we start, there's some tech tips and tricks with this. You see this due diligence checklist. You see there's a lot of documents that you need to prepare. It's very likely you might think, oh, I'll just do a Dropbox or a Google Doc or a Google folder or something like that. What we recommend is DocSend. Okay, this is I think it's like $12 a month to set up essentially a Dropbox folder. It's called DocSend that has Google Analytics on it. So when someone goes in and you send over links to this DocSend folder that is your due diligence folder, and they spend, you can see when they spend 30 minutes on your organizational chart and 5 minutes on your traction report. In your pitch deck, you can see when they spend 7 minutes studying your go-to-market strategy and only 2 minutes looking at their use of funds. Right? With that information, you can have a more informed, nuanced conversation with the investor, whoever is looking at these documents. All right? Sounds good? You can also, with DocSend, you can make it so they can't download, they can only view, and you have a password so that they need to use, and you have to put an email in to see it. So the idea is just to be more informed about who is viewing your documents and when. We have seen situations in the industry where somebody's pitch deck gets out into the universe and then it ends up on linked from a Miami Herald story, and it's all out there. That's never fun. All right, I think Tom knows that. So yeah, you want to make sure these are important documents. There's certainly some sensitive information here, so we recommend DocSend. Okay, everybody cool on that? All right. So hey, fortunately it's on one page, right? So let's look at it in the half glass full here, and let's go top to bottom. Okay. So C Corp formation. So when you are raising capital and you want to do priced equity rounds, right, where people are taking equity in your business as opposed to getting membership units via an LLC, you need to have been converted to a C Corp, right? And when you're a C Corp, you're just a little more investor friendly, right? Because there's not that pass-through, it's not a pass-through entity like an LLC, whether that's gains or losses. When you're an investor, you want to see the losses because you can take a tax break. But sometimes when you see the company does really well and there's gains in the LLC that are passed through to you as an investor, you may never even see $1 from that. You have to pay tax on it, right? So that's why we do C Corps. Founder vesting. So all the team members should have vesting schedules, right? When you start a business, you usually have a 4-year vesting, a 1-year cliff for your partners to make sure that everybody's interests are aligned, and we're going to keep working on this over that 4-year time frame. So you want to make sure you have some details in there. IP assignment. So I was on a panel at the National Cannabis Industry Association meeting yesterday afternoon, and I was on stage with an IP attorney, and about half the conversation was about protecting your intellectual property, right? So there's this thing called IP assignment. As a startup, a new business, you need to make sure all your founders, your employees, and your contracts are signing. You have a clause in all the agreements you have with them that has IP assignment, right? Because you don't want someone coming back when you're about to sell to Google for $1 billion and saying, you know that logo I designed for you when we were buddies? Yeah, so what do I get for that? Because that's my IP, right? And you don't want that coming back to haunt you at the 11th hour in a deal. Okay? And a smart investor will want to know that you've done the work to protect your intellectual property. You may not have any money to defend it if someone comes and tries to take advantage of the situation, but at least you have it locked up there. Letters of engagement from attorneys, accountants, like these are just, again, signals to investors that you've got your act together, and you would be shocked and surprised how many people do not have an idea who's going to do their taxes, right? So again, we're just trying to send a signal to our strategic partners and investors that we've got our act together and we're thinking ahead. Pro forma financials. Okay, so this is a lot of fun. Everybody's favorite thing is put together pro forma. So, you know, we'll work through what these pro formas should look like, and we'll spend a fair amount of time making sure they pair up to your business, your capital raise, and your fundraising timeline roadmap. But you want to have that in there, and you want to be able to understand whether or not the investor you sent the docs to are diving down into that financial pro forma, right? Because that's going to help you prepare for the meeting and be ready. You might even call in your CFO or your contract CFO or somebody who's really strong on finance, on your advisory, whatever, to be in a meeting with that investor, right? So we get understanding why doc send is really valuable here. Statement of capitalization, so that's your cap table, which is something, if you are a C Corp, E-shares, well, formerly known as E-shares, now known as CARTA, C-A-R-T-A, they have like $100 a year cap table management service. And when you call them up, they're going to try really hard to upsell you onto all other sorts of services, but just remember, that's a good one to have. It sends a good signal to investors that you've got your T's crossed and your I's dotted. Job descriptions. This should be pretty easy, right? And the exercise that you should do is you have everyone on your team write out what their job description is, if you haven't done it already. You know, as you're starting, because that's a great conversation to understand with your co-founders if you're feeling like you're both covering a certain area, where you're like, oh yeah, who's going to do marketing, right? So you find out where the gaps are. So I think that's a good exercise that for you as co-founders to go through to write up the areas that you want to focus on. And it's great just to have it as a legacy document as well. Board of advisors. So as you build out your sort of village of folks who are going to help you, we've talked with a number of you about having a leadership advisor or a finance advisor. Really, you want to build a nice team of wise men and women around you who you can call when you're stressed and you don't know what the answer is to a certain question. I have it. Micah has his own board of advisor. Everyone should have, you know, a group of advisors and mentors that you go to, but this is more of a formal one. And with it can come some equity that they can earn, right, over time. And so there's some guidance there to your vesting for a quarter point of equity. This is easy equity to give up because if you pick the right advisors, you can get a lot more value back in return, and it's a sort of good give-get. Okay? So as you start developing, you start taking on an investment, or even before you've raised capital, you need to start thinking about a board of directors, right? So if you know, usually when you raise capital in a seed round or a Series A, that there will be a representative of that round, one of the investors, hopefully, usually, sometimes, not always, the lead is going to take a board seat on your company, right? And with that comes a whole slew of things, right? Regular reporting, quarterly meetings, annual reports, good governance, right? And it's good to make sure that you have the right people on your board. For the time being, until you form a board, open up a Google Doc and write up your thoughts about the board. I want to have 3 members. One will be me, another one is going to be my co-founder, and third one is going to be representative of our first round. That's usually the easiest way to go about it. Okay? Current financial statements. So we will be having a session on setting up QuickBooks, and we'll have a company called ABL Growth Partners in. They'll come in and they'll talk to you about fractional bookkeepers and accountants and controllers and CFOs and how they can help you at a pretty affordable rate to set all that stuff up for you. But once you have QuickBooks up, you can essentially set up reporting so that you just output your P&L, your cash flow, right, and put it into that folder on a regular basis. Traction report. So we've said traction a few times. This is sort of a document that is going to keep, that you'll be updating on a regular basis. It's going to have a cadence there. If it's monthly or twice monthly, that's updating on what you've accomplished. Your traction. I just formed my board of advisors. In January and February, I joined the Canopy program, and I've already got a new team member on the team. We're going to work great together and do great things. This is their background, and since then, we've already had 5 meetings with investors. Our social media following has grown from 0 to 1,500 followers, or we have our first beta partner, right? We have our first paying customer, or we have break even, right? Or we're doing 15% in profits, growing to 20. These are the types of things that we want to just keep fresh there, so that investors can see this as a real business trending in the right direction. Resumes. So the resumes, it can be resumes, or it can be a document that has short descriptions and links to your LinkedIn profiles, right? So we just want to make sure that, because so much of investing is about people, that you can sort of stand up your professional background as an asset, and it's easily accessible to those investors. About middle of the page, we have subcontracting agreements, right? So if you're outsourcing fulfillment, if you're outsourcing development, right, you want to make sure you have that subcontractor agreement, and of course, in that subcontractor agreement, there is IP assignment. So we'll come back to that, right? So again, you're being responsible, CEO, manager, co-founder, you're doing all the things. You're eliminating, you're doing all the things you should, and you're eliminating the things that an investor can point to and be like, hey, wait a minute, where's your subcontractor agreement for your development shop? Right, no, okay, what's going on here, guys? So you just want to, again, keep them saying yes, give them fewer chances to say no. And then we get into some of the links to different profiles out there. AngelList, LinkedIn for your company, Breeze, Gust. There's any number of other ones. So that can be often one document that has the links to those, right? Is anybody unfamiliar with AngelList? Okay, so AngelList is it's sort of like a mashup of LinkedIn and Crunchbase. Essentially, it's like a profile of your business, and it's a website that's full of investors and entrepreneurs. If you raise a round, often you make a note in AngelList so people can see that, again, you're moving in the right direction. Sort of like LinkedIn a little bit, but for your business. Breeze is a crowdfunding site, an informational site that is owned by ArcView. And when you go to pitch on the ArcView webinar, which we're setting a date for that, probably going to be hopefully in week 10 or so. So get ready for that. That the investors at ArcView can access easily information about you through that platform. Executive summary. So this is a document that you want to start working on, and it's a great document to continually update and refresh. This is really a one-pager on your business. We have some great templates for the executive summary that we can put into this due diligence checklist folder so that you can start taking a look at what those are like and start creating them for your own business. This is a good thing to bring in your briefcase, whatnot, when you're at investor meeting, investor forums, pitches, where you can just say, hey, look, here's one sheeter on our company. It often has sort of key team members, what do you do, and problem solution, a little bit of a financial summary, links to your AngelList profiles and things like that. Okay. Let's see, term sheet. Okay, what's a term sheet? It's a list, a document, a sheet of paper that has a list of terms related to your investment. Who would have guessed they call it a term sheet? Basically, it's like a hyper condensed summary of your investment documents. Again, we have great examples of that. I think we're going to have KO, a law firm, come in town, come talk about these things. But we have all sorts of examples that we'll also put, of term sheets that we'll put onto the shared folder on the Google Drive. Now, when do you use a term sheet? When I get introduced to investors, I'll often follow up and say, an email, hey, really nice to meet you. We made, X number of investments in the cannabis industry, because that's 79 now. And we're always happy to talk to new investors, whether they're interested in investing in our fund or our companies or somewhere else. If we're raising money, I say, we're actually raising money now. Let me know if you want me to send you our info deck and our term sheet. Right? Often you don't want to inundate them with a 25-page investment document. Good place to start is the term sheet. And key elements of the investment document. Operating agreement, a document really outlines how your company is going to be run. If you form an LLC or a C Corp, there's going to be some documents that essentially are your operating agreement you put in there. Subscription agreement, that is the investment document. Or that can be a convertible note, it can be a stock purchase agreement. It is the official investment document, where they have to say they're accredited investor, how much they're going to invest, what they get in return, how many shares are going to be issued, all that stuff. That is definitely a document that is prepared and reviewed by your lawyer, right? As is the operating agreement. And sometimes you can create the term sheet, but it's always good to run it past your lawyer. As Micah said the other day, you absolutely have to have a good lawyer as part of your startup team, because if you don't, you're going to pay for it later. Pay for it now, a couple $1,000s, right? You're paying for it later, a couple $100,000 or millions.
Yeah, Patrick, does Carta do subscription agreements too?
They do it.
And creating those documents for term sheets?
Carta does a lot of things, but I don't think they're going to get into creating those documents.
Okay.
And I don't think you want a group like Carta or even LegalZoom to do your documents. You need to find an attorney, a lawyer who's doing 10 to 20 investment deals a year, right? Because they need to stay up on the most current language, protections, terms that are being utilized. So there's a couple of law firms in town, KO, Modus Law, Hovind Law down in Denver has some. Vicente Cedarberg does some work. Then there's Dorsey and Whitney. They're a fifth firm. So if you need any introductions there, you don't feel good about your lawyer, you want to talk to someone else, get a different perspective, don't ever hesitate to ask for those introductions. So next, valuation, comps, and exits info. So for the sector you're going to be in, whether it's blockchain and ID verification, or marketplaces around marketing, or whatever it is today, it's API integration stuff. You want to become the world's leading authority, right? You want to understand who are the companies in the conventional spaces that are doing what you're doing, and you want to understand, be aware of the companies in the cannabis industry that are doing what you're doing. And the way that you accomplish that is being a bit of an investigative journalist, right? A little investigator. And it's a great task for an intern, okay? To go out and understand the comps, call up, find out who the investment bankers are or the business brokers, call up those companies and look them up on Crunchbase and VentureBeat and just go down the rabbit hole on your competitive set, right? And find out, usually from the investment bankers, what do valuation multiples look like at exit? What are some of the comps in the P&Ls, like the KPIs that these other companies are looking at or tracking, so that you can be as comparable to them as possible? Because from the perspective of an investor, they want to understand, what am I getting into, and how do I get back my money plus times 10, right? 10x. And who might be an acquirer? Who should I be aware of in the competitive space? And then if there are companies that are exiting for 19 times EBITDA, and there's 100 deals a year in that sector, that's 2 thumbs up, right? For you as founders to have selected a business that has good exit potential, right? Some investors, they're like, I don't really care, and you shouldn't either. Just focus on building a great business. And then there's another half of investors that are like, all right, what does this look like at exit? How frothy is the market? How many deals are being done a year? What's the multiples? What can we model? Okay, so that's definitely something fair number one. Articles of incorporation, state and federal registrations, IRS employee ID number, right? These are, again, all sort of very administrative things. Again, great tasks to put an intern on to sort of make sure that all of these things are put together. Your investor deck. Okay, so this is, so we'll talk more about this later today and how to pitch, but you have your investor deck and you have your pitch deck, okay? So your investor deck is like your business plan in PowerPoint. The truth is that if you're an investor and you get set a business plan, usually you respond back and say, can you just send me your pitch deck, right? It used to be that everyone wrote these long, detailed business plans. It really isn't the case anymore. So the investor deck, though, is your business plan in PowerPoint. If your pitch deck is going to be 13 slides talking about, you have an intro, problem, solution, size of the market, the target addressable market, you do a quick demo of your product, talk about your team, your traction, go-to-market, financials, investment ask, use of funds, and a wrap-up, right? That's like 13 slides. That's off the top of my head. Your investor deck, so that's your pitch deck. Your investor deck could be 60 pages, 60 slides, where you go more deeply. You don't have one slide on go-to-market. You have go-to-market, and then you talk about the different ways that you go to market, right? You might even talk about the talent that you already have on your team or that you're going to hire. You go from high level to more tactical elements there. Or with your financial summary, if you have like in your pitch deck, you have one chart and that has like 3 lines on it, right? In your investor deck, you might have 3 or 4 slides with summary financials, a little more detail that they can go in and look at the key numbers that they should be interested in your business, right? So that's the difference. Does that make sense? Investor deck, pitch deck. Pitch deck is usually very visual, very few words. Investor deck can be a bit more robust and dense. Okay. So the due diligence checklist. That's it. Piece of cake, right?
Good question.
Yes, sir.
When setting up your board of advisors and directors, would you do that like on your, and you're giving an equity piece? Is that post money? Because we don't know exactly what our valuations are.
Yeah. So what you do, so this is an important thing when you're thinking about, and your lawyers, they'll help you with this. When you're bringing on people that are going to help, co-founders or whatnot, you want to talk in number of shares that then translate to a percentage, right, of the company. So this, it says a 1/4 point for an advisor. But if you've issued, a million shares, you're going to give a quarter, what are the equivalent of a 1/4 point of those shares to the investors. So you'll start with 1 million shares, right, and then you'll give shares that are going to, that total then will, the amount that you give them will be equal to a 1/4 point of the total. Does that make sense? Mm-hmm. Okay, so it's just a percentage of the total, not necessarily, we're giving you 1/4% of the shares, right? So it's a number of shares that you give.
You usually give a grant, or do you make it performance or time-based?
Well, so as a, yeah, it can be both. So here we say 2-year vesting for that 1/4 point of equity. Okay, so that means that you award them the share, and then over time, that share is vesting and really coming into their ownership, right? But they have to earn it over time. You don't want to just give it to them, and they don't have to continue to work for it. And I think that's pretty well understood. That if you have somebody that's like, no, I'm Warren Buffett, give me a 1/4 point today, you might say yes. But if people are sort of pushing back and saying they want equity now, obviously we're here to talk about it and to assess whether that's worthwhile, but I think you want to lead with, this is our standard advisor agreement and equity award. Okay.
This is something too, I think if you're putting links in anything, just make sure those links work. And particularly if you're sharing documents, make sure you can actually see. It's a really obvious thing, but
Always,
I can't tell you how many links
yes,
broken.
always make sure it works before you send it off, right? And it'll break, and somebody will be like, oh, this isn't working, and that stinks, but just try to stay on top of it. Yes?
I'm curious for things like founder vesting, IP assignment, like operating agreements. Those seem like they would theoretically be relatively similar across companies? Are there like boilerplate documents that we could use so we can
Yeah.
save the fees of lawyers actually drafting it? Is that-
Absolutely, absolutely. We have a lot of examples. We'll probably just start filling this due diligence checklist folder full of those examples.
Such like subcontracting agreements.
Yeah, and if you don't see it in there, don't be afraid to ask, and don't be afraid to ask the alumni community on Slack, because you might get like 5 versions back, and then you get to choose and come to play.
So
Yes.
is there a way to kind of incentivize an intern or someone that we bring on with equity before we convert to a C Corp?
Sure.
Like any form, like a.
Yeah, if you're an
contract
LLC,
agreement?
you can award them units
Okay.
or whatever it is in your LLC. Yeah. Any other questions? Okay, so what we're going to do is we're going to print off one of these for every team, and we're going to put them up on the wall over there on the glass, all right? And as you complete different pieces of the due diligence checklist, go over there and put a check or an X in the box, right here, where it says link, right? Just check that off so we can keep on top of how it's coming along, how you're progressing, and then we might give awards to people who are. Yeah, it's a public ledger. Right. Distributed public ledger out in the class, right? So, this is again an important thing. Where it comes in, where we'll first use it is when we assemble the investment committee to review all of your progress, right? It'll be your first exercise probably in sending this out to other investors to look at it. And you'll get to see how it works or doesn't. Cracks and fails, right? But it's going to be a great first experience with it.
Patrick, do you have a timeline when they should have it ready?
Yeah, I think that around week 7, we'll start getting the investment committee going, and they'll probably start looking at these due diligence packets probably in week 8, week 9. Okay? Sound good? All right, 11:36. You guys get back 20 minutes. All right?